Hi, this is Jeffrey Kurt Financial Group. Today's Monday, August 3, 2026. Start of a new week, start of a new month, and hopefully turn the page on some of the carnage that's going on. But I think there are some important things to think about and consider for investors. And they may not be today's news, but it's, I think, some really important concerns or clouds on the horizon. Maybe it clears up, not predicting that we're going to crash or anything. But again, I think there are some things that I'm concerned about, and I want to talk about them. Again, if I go into them in detail, it'd be a 15, 20-minute podcast here. So first of all, last week, situational awareness was a hedge fund that failed. So it was a $45 billion of equity. But on top of that, they leveraged it 400%. So, this is just shy of a $200 billion player in the market, and it failed last week. They sold its holdings at a discount to Citadel, and I guess they just folded up. Whether they've got some maybe other investments that they held on to, some private stuff, I don't know. But it was a big event, and maybe that's put in an inflection point in the AI trade. But during July, or from late June to the end of July, some of those AI names were just crushed. Micron, from its late June high to last day of July, down 34%. SanDisk down 48% from its high to last week. Glassworks, Corning Glassworks down 46%. Intel down 35%. So that's some of the stuff that's going on in the stock market. Yes, we're going to bounce here. It looks like maybe it continues. Maybe the worst is behind us. That certainly could be the case, but there are some other things going on. In Japan, the yen is collapsing. The government's trying to support it. The U.S. government is intervening and trying to support and buy yen because of the yen carry trade and low interest rates and like that. It's a big problem on the value of the Japanese currency and maintaining some stability there. If it continues to fall, it could bring in a lot of other variables that would just exasperate the instability. Next, the U.S. Treasury yields, bond yields, on the 30-year, it's a 19-year high, well above 5%. And that's a problem. Now, again, what's causing it? Obviously inflation has an impact, and inflation is being pressured higher by oil, among other things, but oil. And so that's pressuring the yield. But also, I've been reading that, the fiscal deficits that we're running may finally be called into, hey, you got to do something by the bond market. And, Congress is not doing anything. I mean, the last time they passed a budget, I think it was over 15 years ago. Both sides, I'm not trying to make a political statement, but both sides of our government in Congress are not doing anything and just keep spending money. And whether, however you end up resolving this thing, the bond market right now might be saying, we're not going to buy any more bonds. And if interest rates have to continue to move up, that's going to be a problem for the economy. So again, those are, I think, some of the important things that maybe longer term are going to have an impact. Now, stock market is bouncing to start the month and start the week. Again, with the oil price down today, perhaps some peace breaking out in the Middle East. And so hopefully, maybe the worst is behind us. I could certainly, I hope that, and I could believe that. But again, there's a lot of problems out there, I think, too. Looking ahead for this week, lots of earnings going on still. And the jobs report, the July jobs report will be the end of the week. So that will be an indication on what's going on for the job market and the economy. There are certainly clear signs that the economy is expanding and doing pretty well. But again, I think there are some things out there, some potholes that we got to be aware of and like that. So we'll end it there. It's been a kind of a long session, so I want to end it here. We'll be back on Wednesday. Thanks for listening. Send us along any questions or comments. Goodbye.